Let me welcome you to Mason African Motives. We are on accounting grade 12, paper 2, that is term 2 revision. We are on term 2 revision. So in this presentation, we are going to do question 3 as we are doing the very same question paper that we did in our previous presentation. So that is the very same paper that was written in KwaZulu-Natal province in June examination 2025. So we are on question 3. So good people, let us be together from the start of this presentation to the end of it. So like I've said, we are going to do question 3. So let's quickly attend to our question 3. So here we are on question 3. Here we are on our question 3. So it's all about a stock inventory system evaluation. Inventory system valuation. So that is what we are going to discuss together. So question 3, inventory system and valuation. So this question is 40 marks and you are just to take 35 minutes to do it. So like we've said, it's event evaluation. So now it says you are provided with information related to Ladysmith Traders for the year ended 28 February 2025. The business now is owned by Kelvin De Bruyne. The business sells one type of Rolex watches, and the periodic inventory system and weighted average stock valuation method is in operation. So that is that. So required now, as it says, 3.11, explain two difference between perpetual stock system as well as periodic system, as well as periodic stock system. So that is the first question that we are to answer. So we do have our answer book. Let's quickly go to our answer book and answer that question 3.11. So here we are, where you know very well that we are asked to give the difference between perpetual stock system as well as periodic stock system. So let's first start by the perpetual stock system, perpetual stock system. So with perpetual stock system, the stock is updated continuously. So we are saying with perpetual stock system, stock is updated continuously. Stock updated is updated continuously. Stock is updated continuously. Stock is updated continuously after every sale or purchase. After every sale or purchase. So you always know how much stock do you have. That is why I say stock is updated continuously. So it means after every sale or purchase, you always know how much stock you have. But now it's different when we come to a periodic stock system, because periodic stock system is stock is only known after a physical count. So that is under periodic. We're saying stock, stock is only known. Stock is only known after physical stock count. After physical stock count. After physical stock count. So usually that is at the end of the year. So that is that when you're talking about the difference. As you have said, perpetually, the stock is updated continuously. So it means after every purchase, you always know how much you have. So it simply says stock on hand is available at all times electronically. That is when you're talking about perpetual stock system. But with periodic, like we have said, stock is only known after physical stock account. So it means now that stock on hand is available through physical stock take. So we can even give examples of what we have just talked about. Under perpetual stock, you can say a store using scanners at the checkout. Update stock immediately. That is perpetual. But with this periodic stock system, you find that a small shop counting stock at month end, that is periodic. Hope we are together on that. So we can as well give difference of these two by their cost of sales. So under perpetual stock, cost of sales calculated every time a sale happens. That is under perpetual. Cost of sales, we are saying cost of sales is calculated every time a sale happens. Every time a sale happens. So it means cost is recorded immediately. So under periodic now, a cost of sales is calculated at the end of period. Cost of sales is calculated at the end now, at the end of period. So that is that. So it means a periodic only calculated at year end using a formula. So that is that. So you will find again under a perpetual stock that stock purchase is recorded as an asset. Stock purchased is recorded as an asset. But under periodic, you'll find that the stock purchase is recorded as an expense. That is the difference again of these two types of what? Of stock system. So that is that. So now let us move on to 3.12. So here we are on 3.12. 3.12 says calculate the following: custom duty paid per watch, the value of goods in stock using weighted average method, cost of sales, stock holding period in days for 2025, and also comment in 3.13 on the stock holding period for 2025 as 2024 was 158 158 days. So that is that. So now let us go to our information. Here we are on our information as we have information A up to F. So you can see we have information A up to F. As it says, the Rolex watches are imported from USA. The watches are valued using weighted average method. So C, we have balances now, as you can see. Here are the balances. We have opening stock, a number of units of opening stock, as well as the value of that. We have closing stock, number of units, though we don't have the amount, the value of the closing stock, of which we are going to calculate it. So information D is about the purchases that happen during the year, as you can see. But E, that is carriage on purchases for the financial year, watches were transported at 50 Rand per watch from Kinshasa International Airport to business. That is that. Information F, this is where returns happened, whereby there are 5 watches that were bought and they were returned. So you'll see when we do them. So what we are to do now, as question wanted us, our question wanted us first to calculate custom duty per watch, custom duty per watch. So we want that custom duty per watch. So as you can see now, um we have the amounts, total amounts excluding customs. We have custom duties amounts. So we have these totals, and we have the as well as the number of units. So that is that. So for us to calculate that, we are first going to say we are going to start with the total amounts of custom duty plus the total amount of excluding customs and carriage. So we are going to add this 40,500. That is the total that we are given. We are going to say 40,500. This is a total for custom uh, duty. This is a total for custom duties when you add this together. There is an error on this total excluding customs and carriage. We are not going to use that because the question wants us to calculate custom duty paid per watch. So it means you're going to look at only the amount for custom duty divided by the number of units. Meaning to say we're going to say 40,500 divided by 270, of which when you divide that, you're going to get 150. So 150, that is a custom duty paid per watch. So that is that. You're not going to use these amounts for total, excluding customs and carriage, because the question was clear. We were asked to calculate custom duty, which is 18,000, 12,150, 10,350. All in all, they give us how much? 40,500. And then the number of units, as you see, from the 1st March to the 11th January 2025, we got this 270. So all in all, they will give us 150. So let us just go to our answer book and then record it. So you know very well that we added 18,000. As you have seen, it was 18,000 plus 12,150 plus 10,350. So that is that. Then we are to divide this by, then we're going to add those units, 120 plus 81 plus 60 plus 69. So all in all, they will give us how much? They will give us 270, as you have seen. While is this one, they will give us 40,500. So what you're going to do is to say 40,500 divided by 270, and our answer will be 150. So that is that. So hope we are together with people. That is a custom duty paid per watch. That is a custom duty paid per watch. So now let us move on to, let me write it clearly. What is happening now? We are saying it's 150 per watch. So now let us move on to another question. So the other question says calculate the value of closing stock using weighted average. So as we are done with the custom duty per watch, now we are to calculate the closing stock. we are to calculate the closing stock using weighted average. So now let us get to our information. So for us to calculate the closing stock, we are going to use these values. We are going to use these values, these total amounts of these values, as well as then divide them by the number of units. So it means we are going to start from opening stock. Then we're going to say opening stock plus a custom duty plus total excluding custom duty and carriage. And then we are as well going to have the carriage now on purchases. We need to have carriage on purchases as we are told that we have carriage on purchases. So let us just do it now so that we can see how we are going to calculate our weighted average. So we are first going to start by our opening stock. So that is 3,803,500. And then you're going to say plus our total excluding customs and carriage, which is 9,348,000, 9,348,000. So that is 9,348,000. So this is the amount that we're talking about. Plus customs duty of how much? 40,500. 40,500 as you can see. Also, we have carriage on purchases. As it says, carriage on purchases for the financial year. Financial watches were transported at this much, 50 rand per watch from Kinshasa International Airport to the business. So that is per watch. So how many units do we have? We have 270 units. Meaning we are going to say 270 times 50. So that will give us 13,500 as our carriage on purchases. As our carriage on purchases. So that is that. Then we are going to minus the returns because we do have returns. As it says, 5 watches bought on 15 August 2024 were returned to the supplier, and the supplier agreed to refund how much? 35,000 per watch. So how many watches were returned? So there are 5. So meaning we're going to say 5 times 35,000. 5 times 35,000, then it will give us 175,000. So that is that. So all this we are going to divide by the number of units. So same when you come to units, you're going to look at the opening stock. Our opening stock units is how many? We started our stock with how many units? 100 units. So we're going to say divided by 100 plus the units that were bought during financial year. So you're talking about the purchases. So the units that were bought during the financial year are 270 plus 270. So there are units that we returned. How many units did we return? 5 units because we returned 5 watches that we bought. So we are saying minus 5. So we are saying minus 5. So all this is going to give us, if you add this, and then minus these returns, you are going to get 13 million and 30,500 and 30,500 divided, remember now, yeah, divided by 365, because when you add this minus 5, there's going to give you 365. So then you are going to get the answer for this. You are going to get the answer for this, whereby the answer will be is going to equal to is going to equal to 35,700. Remember, we want what our value of closing stock. So we know the units or the number of units of closing stock. How many? They are 78. One would want to see where is that. So here is our 78 units of closing stock, but we don't know the value of our closing stock. So this amount, we are going to multiply it by 78, and it will give us 2,784,600. So this is our value of what? Of closing stock. This is our closing stock. So this is for Roman figure 2, because Roman figure 1 was about what? The value of duty per watch. So this is how we calculate it. Hope you understand it. So we can now go and write it in our answer book. The value of closing stock using weighted average. Remember, I have said when you do that, you're going to add all the amounts and then you divide them by the units. So that is that. So I'm just going to repeat what I've already talked about. As you have remembered that our opening stock amount was 3,803,500, and we have said you're going to add it with 9,348,000. So this was the total amount, which excludes our customs, if you remember, and duty and carriage, in fact. So 40,500, you remember it is for customs duty. Then we have carriage on purchases of how much? 13,500. Then we remember we were to minus our returns of 175,000. So that is that. And then we divide this by our units. Our opening units is 100 plus the units that we bought during the year, that is purchases, that is 270. Then the returns of the watch, then we subtract that. So like I've said, you are going to get this much: 13,030,500 divided by 365. So you get 365 here in units. Then you are going to get how much? 35,700, which we have said this 35,700 you're going to multiply by what? You're going to multiply this amount by 78. Remember, this 78, these are the units of our closing stock. And then the final answer will be 2,784,600. So this is our closing stock. So that is how easy it is. So now let us go to another question and see what is required again from us. So now here we are done with the value of closing stock. So we are asked to calculate cost of sales. Cost of sales. So that is that we are asked to calculate cost of sales, and then we come to our information. So we are to calculate the cost of sales. So for us to calculate cost of sales, already we know our cost of goods available for sale. Already we know our cost of goods available for sale. So meaning to say, we are just going to straight to the answer book and answer that question. So we are going to answer it straight from our answer book, because already we have the figures that we have calculated. So let us quickly go to our answer book for us to calculate the cost of sale. So cost of sales, like I've said, we already know our a cost of sales available for sales. So cost of sales available for sale is 13,000, 13,030,500, because these are these amounts that we have added and subtracting the returns. So our cost of sales uh, available for sales, we are saying this is going to be 13 million and 30,500 minus now our closing stock. So it means now we are going to minus our closing stock for us to get what? To get cost of sales. So our closing stock is 2,784,600. And this will give us what? This will give us our cost of sales, which is 10,245,900. So that is how easy it is. So hope we are together. Great. 12. So now let us go to another question. So let us go to another question. So the other question, we are asked to calculate the stock holding period in days for 2025. Stock holding period in 2025. So that is what you're going to do. So let's quickly come to our information. Let's quickly come to our information for us to calculate that. So for us to calculate the stock holding period, there is a formula for it, whereby the formula for that is half of our opening stock plus closing stock then we close the bracket, divided by cost of sales, multiplied by 365 days. 365 over 1. So that is how we are going to calculate our stock of holding period. So like we've already have the amounts for that. So let's quickly go to our answer book and just do it as quick as we can. Calculate the stock of holding period. So like I've already talked about the formula. As I've said, it's half of what? Our opening stock, half of our opening stock plus closing stock divided by cost of sales, then multiply by 365 divided by 1. So that is how we are going to calculate this. So make sure that you understand this formula. It's very, very, very important. It's very important. So go through it and then understand it. So now let us come to amounts now. So now let us come to the amounts, as you now you know the formula, as you know the formula now. So like we have said, it's a half. We have said it's half of our opening stock plus closing stock. So how much is our opening stock? So it's very important that we know our opening stock. How much is our opening stock? So here is our opening stock. 3,803,500. So how much is our closing stock? Because you're going to add the closing stock. How much is our closing stock? So already we have calculated the closing stock. Already we have calculated what? The closing stock. So the closing stock that we have calculated, this is this amount. So meaning we are going to say 3,803,500 plus 2,784,600. Then we are saying divided by a cost of sales. Already we have calculated our cost of sales. How much is our cost of sales? This is this amount. So you're going to divide it by this amount. So you're going to say divided by 10,245,900 multiply by 365, 365 divided by 1. So all in all, when you do the half of this, you're going to add this and multiply them by half of this. So we're going to add opening stock. Remember, this is opening stock and this is closing stock. This is opening stock. This is closing stock. So you're going to add this opening plus closing and then multiply by half. And then you are going to get 3,294,050. When you add this and multiply by half, then you're going to say divided by closing stock now 10,245,900. Then you say multiply by 365 divided by 1. Then you're going to get how many days? You're going to get 117.3 days. So that is how easy you are going to get the stock holding period in days for 2025. So that is that. So now let us go to another question and try to see what it wants. So 3.13 says comment on the stock holding period for 2025. 2024 was 158 days. 2024 was 158 days. So 2025 is how much? It's 117.3 days. So now we are to comment on that. So we are saying 2025 now, as you have calculated, it is 117.3 days. But now it has improved to, it was 158, now it comes to 117.3 days. So now let us go and comment on our answer book. So, like I've said, in 2024, it was 158 days. But you can see now it is 117 days. So, meaning now we are going to say stock holding period improved. So, we are going to say stock holding period improved. It improved from 158 from 158 to 270 217 days by 41 days. So it improves by 41 days because if you subtract 117 from 158, that will give you 41 days. So it means now watches were on demand. It means watches were Watches were on demand. Watches when were on demand because it just took 117 days for them to sell. So it means now the stock holding period improved because earlier on in 2024 it was 158 days. So now it just took us how many days? 117 days for us to sell our stock. So stock is sold faster. So it means now business is more efficient. Now less money tied up in stock. So that is that. The stock holding period improved by 41 days, indicating better stock management and increased demand for watches. So that is that. So now you get your 3 marks. So another question now is 3.21. So let us be on the questions under 3.2. So as you can see now, we are done with our questions. Now we are done with the first ones on 3.1. So now we have to get to 3.2. So 3.2 is problem solving. 3.2 is problem solving. As it says, Fusi Mlungu owns 3 bicycle shops. So we have shop A, shop B, shop C. He appointed a manager of each of these shops. So you are supplied with information regarding each of the shops. He wants to improve the financial results of these shops and is asking your advice on them. So each store calculates their selling price at a cost plus 60%. So managers may decide to adjust these prices by 10% if necessary. They will adjust it by 10%. So required now, comment on the price adjustment policy. Is it good idea to allow the managers to adjust price? Provide figures to support your answer. Provide figures to support your answer. So that is that. 3.22. Identify one problem relating to each shop and provide figures to support your answer. In each case, provide a possible solution. That is 3.22. So 3.21, let us attend to 3.21 and then we first come to the given information. 3.21, if you can remember very well, we are asked to comment on the price adjustment policy, whether it's a good idea to allow the managers to adjust price. So we were asked to comment with figures. So looking at this, we can see that Mutembu decreased his price by 10%. If we can look at this, you can see Mutembu, here is, he decreased his prices by 10% because now we can see he is on 50%. He is on 50%. That's why I'm saying Mutembu decreased his prices by 10% as his sales are highest. You can see now his sales are highest. So hope we get that. But Shabalala now, we're talking about this. Him, Shabalala, increased his price by 5% because it's no longer 60, it's now 65% now. So it means Shabalala increased his prices with 5% and he had the lowest sales. You can see his sales are lowest as compared to Mtembu's sales. Hope you get this. As you can see here, we were told that each store calculates the selling price at a cost plus 60%. At the cost plus 6%, 60%. But when you look at this information, you can see now the targeted profit markup of Nzumailo is still 60%. But from Tempu now is 10%. And the Shabalala is 65%. So that tells you that Mutembu decreased his prices. He decreased his prices by 10% because it's no longer 60% that we talked about. It's now 50%. And his sales increased. Because of the discount that he made, his sales increased to 510,000. But with Shabalala now, he increased instead of decreasing. And look at his sales. His sales are low. He has the lowest sales. So it means now the customers, because of the increase of the price, they are no longer buying. So he chased away the customers. So hope you get this as we are going to now to our answer book and then write it answer in our answer book. So what we are going to say is that you are going to say Mutembu decreased his prices by 10%. By 10%. And his sales are highest. His sales are highest because of the discount that he gave. His sales are highest. Shabalala increased his prices by 5%. What happens to his sales? And his sales he had lowest sales. And he had lowest sales. So that is how it is. And remember, we were to do that, we were to comment on the price adjustments policy, and then we are to tell, is it a good idea to allow the managers to adjust prices? So now we can say it is a good policy to allow managers to give discount. It is a good policy to allow managers to give discount. To give discounts, but they should not be allowed to increase prices. They should not be allowed to increase prices. So this is the advice that we can give because we were asked to give advice. We have seen when Mutebu decreased his prices by 10%, as it was 60%, and then he decreases to 50. So it means his prices were decreased by 10% and his sales were highest. His sales were highest because more customers came because of what? Discount. But with Shabalala, who increased his price by percent, his sales were lowest. So it means he increased the price, he didn't give what? A discount. So once you give a discount, is a very good idea because the discounts are going to make customers to come in numbers. So that is why we are saying it is a good policy to allow managers to give discounts, but should not be allowed to increase prices. I think what you're talking about is what you have seen. What you're talking about is what you have seen. This is this. So I think it's clear now because we can see that a 10% discount was given by Mutembu and his sales increases. His sales increases. But this one increased it from 60 to 65%. He increases the prices. And what happened to his sales? His sales dropped and then his sales were the lowest one. So hope we are on one page. So let us now go to another question. 3.22, we were asked to identify one problem relating to each shop, and we are to provide figures to support our answer. So in each case, provide a possible solution. So that is that. So now let us attend to that as we are going to try by all means to identify a problem from each shop, as we are having shop A, shop B, and shop C. So you're going to identify the problem using figures and then providing what? A solution. So let's first start by shop A. If you can look at shop A, if you can look at the days of its stock on hand. So if you can look at the days, you can see shop A, the period stock on hand is 120 days. It's 120 days. It's 120. So this is too high. This is too high, as you can see. It is the only one which has this highest number of days for the of the stock holding period. So 120 days is too high. So meaning stock stays too long and the risk of damage as well as theft is there. So that is that. That is the first problem that we can say we identify 120 days. Also, the creditors payment period. Creditors payment period. You see now, he pays his creditors too soon. 21 days. He pays his creditors too soon. Pay creditors too soon in 30 days. So that is another problem that we can identify. Remember, we were asked also to give what solutions. So now let us go to our answer book and try to see how we are going to answer that on shop A. So shop A, here we are on shop A. We are going to say 120 days stock on hand is a problem. 120 days stock on hand. Stock on hand. Also pay creditors too soon. Pay creditors too soon. Because he paid them in 20 days, soon in 30 days. So that is in 30 days. So that is that. So this is the problem. And when we were asked to give what? A solution. So solution is to reduce stock level. Solution is to reduce stock level. Keep less stock. Keep less stock. Keep less stock. That is why we're saying reduce stock level. Then again, pay creditors later. Don't pay them too soon because now you left without a cash. Pay creditors later. So that is that in shop A. So now let us go to shop B and see the problem and then try to find how we can solve the problem. Let us go to shop B. So here we are on shop B. Shop B, if we can look at the gross, if we can look at the gross profit margin or markup is 10% lower. This is short B. The markup is 10% lower. Remember, it was reduced to 50%. So it means it's 10% lower. So that is a problem that we have identified that the markup is 10% lower. Also in shop B, there are no credit sales. That is a problem. There are no credit sales. No credit sale. The credit sales is nil, as we can see. Also in shop B, we have too many workers. As you see, that is 10. So it is the lowest when it comes to markup. Is 10% lower. Also, you can see that you can see that there are no credit sales. You are not selling both on cash and credit. So you're only selling on cash. So you must have credit sales so that you increase your sales. You must sell on credit as well. So there are no credit sales. That is why I say it's a problem. Also, you have too many workers. As you can see, these other shops, they don't have many workers. So that is that. So now let us try by almost to write it in our answer book. So we are on in shop B. We have said the markup is 10% lower. We have said the markup is 10% lower. Remember, we have given the discount now. That is a problem as well. Also, we have said no credit sales. No credit sale because you have seen that we have what? We have zero. We have zero nil. We have this nil. So that is what we are saying is a problem. And then we have too many workers, 10. We have too many workers because we have how many? 10. So now we have to give a solution on that problem. Don't give too much discount. Give less discount. That will be a solution. Give less discount. Maybe we're supposed to give at least 5% discount, not 10% discount, because that will affect your profits. So give less discount. That is the first solution. The other solution on shop B, uh, workers to take turns in coming to work. Because now you have so many workers, so you must as well try to uh, because if you have so many workers, it means now salaries are going to be too high, and then they're going to reduce what? A problem. So how do you solve that problem? Reduce staff or rotate shifts. So you can do that by reducing staff. Reduce staff or rotate shifts or rotate shifts or rotate shifts. So you can solve that problem that way. Or you can transfer some workers to other shops. You can transfer workers to other other shops. So that is that. Also make sure that you sell on credit. Sell on credit. So that is how we can solve this problem. So now let us go to shop C and see and try to identify the problems that are in shop C. So here we are on shop C. We're done with shop B and shop A. Shop C, if you can see that the sales are the lowest. If you can look the sales, if you can look at these sales, this sales 24,707, 24,750 is the lowest one. Their sales are lowest. Their sales are lowest. Also give too much credit sales. You see, that is a problem that you are identifying. Too much credit, or the sales are here, not here. I was trying to say sales. So our sales are how much? 247,500. They are our lowest, as you can see. These two other shops, they have more sales than shop C. So the problem is that their sales are lowest, 247,500. Also, they give too much credit. As you can see, their credit um is too much, 222,750. So that is a problem. Also, they have bad debts. Their bad debts are very high. So if you can see their bad debts, here is our bad debts. You can see they have 22,000. 275 as bad debts. So the bad debts are too high. So that is the problem in shop C. So let us just write them. So here we are on shop C. Remember on shop C we have said their sales are lowest. Sales are lowest as our sales is how much? 247,500. That is the first problem that we have identified. The other problem is that give too much credit. Give too much credit. Of how much? 222,750. It's too much. Also, they have what? Bad debts. Bad debts, very high. Very high bad debts. So very high bad debts because they have 22,275. So now we are to give solutions on this. So it means prices must be decreased. Prices must be decreased. Prices must be decreased. Remember the prices on shop C were increased by 5%. So that chased away what customers. That is why now the sales declined because of the increase of the price. So you are supposed to give what shops you are supposed to give discount as well so that they can have more and more sales. So their sales dropped because of the price increase. Also, the solutions that we can give improve again credit control. Improve credit control. Because it gives too much credit. So you find your business without cash now. If all your money is going to be held in customers, so in debtors. So make sure that you control your credit. Then another one is that you can hand over to debt collectors because you have very high bad debts. So you can make sure that you hand over to debt collectors. You can hand over to you can hand over to debt collectors, to debt collectors, so that they can collect uh, from your debtors. So that is that. So that is the end of this presentation. Thank you very much for your time, and please make use of this presentation as to prepare for your coming exam that you're going to write in June. Thank you very much.